military applications and kind of broader commercial application. They've got money coming in from, if you like, from both sides.
Well, I was going to ask you about exactly that, and it's been referred to before as the military-industrial complex.
Anything in that space is super interesting, I think, from an investment perspective, both kind of conventional companies that make tanks, but also drones, cyber, kind of anything in the kind of conventional warfare or hybrid, I think is a really interesting area for many investors, and the shares of those companies are being re-rated accordingly.
Markets are optimistic about technology and rate cuts, but many of the world's major economies are mobilising under urgency.
If we don't spend more together now to prevent war, we will pay a much, much, much higher price later to fight it.
This episode assesses that risk and the companies involved in the military-industrial complex.
By wartime economy, aside from kind of increased military spending, it's really seeing the world as a strategic competition. So the last 30 years, since the end of the Cold War, economies have been run, at least in advanced economies, on market principles, open markets, et cetera, et cetera. The world we're in now is characterized by geopolitical rivalry. But the nature of this competition, or this kind of war, is not so much a shooting war, although obviously there are aspects of that, but it's more about economic competition. So the war between the US and China, yes, it has a military dimension in part to it, but it's mainly around technology, trade, capital flows, energy. And so I think, when I talk about a wartime economy, it's partly around economies configuring themselves in a way to be more self-sufficient, to have supply chains that are resilient, to build competitive advantage, and by extension to prevent their competitors from obtaining technology. So we're seeing wartime economies emerge both in terms of increased military spending, but also importantly around changing the way their economies are perform, behave, where governments allocate money, and it's seen as much more as kind of a zero-sum economic competition between the US and China, between Europe and China, and over time, even small economies like New Zealand, can't avoid that. We're not on the firing lines in a direct sense, but we are a price taker of a lot of this behaviour, and so we can't ignore it either.
You mentioned some really critical industries there. Technology, like semiconductors, and energy obviously is crucial too. Can you explain to me how this is playing out in each of those important industries?
Well, semiconductors is the obvious one. The US in particular has been putting a kind of a cascading series of export restrictions on semiconductor chips, preventing companies from selling their chips, preventing companies like ASML in the Netherlands from selling machines that produce for chips, particularly the advanced machinery, to stop rivals, notably China, but also Russia and various other countries that are not trusted, from accessing kind of high-end technology. Now, that's for two reasons. One is to maintain a position of superiority of US, or at least Western kind of oriented companies, so they maintain positions on the commanding heights of the global economy. It seemed to be a kind of a core part of performing well, but also because a lot of these technologies, the use of semiconductor chips, are dual use. They can be put in cars, they can also be put in tanks or missiles or the like. So, part of the motivation here is to stop countries like China from accessing these advanced technologies that could be used in principle, in a more kind of conventional kind of wartime setting. So it's a combination of kind of economic motivations, building domestic supremacy or global supremacy in the US and Europe and the like, and preventing China from doing likewise, but also trying to maintain kind of a military edge as well. In the energy space, that is a combination of self-sufficiency, which is a long-standing thing. The US, for example, has had a strategic petroleum reserve for decades now, so it's not new. China similarly, Japan similarly, want to make sure we're not going to get cut off. If there's a war or supply chains get cut off, but increasingly, as renewable energy becomes a more significant part of the energy systems, it's about control over the supply chains. So the critical raw materials, from copper to lithium to rare earths, that are kind of inputs both into wind turbines and solar panels, but also batteries, EVs. That's also becoming an area where, particularly China has been very aggressive in trying to build these kind of closed supply chains, and now belatedly the US and others are trying to build parallel supply chains.
According to NATO's new Secretary General, its allies need to make more of an effort to prevent further conflict.
It is time to shift to a wartime mindset and turbocharge our defense production and defense spending.
Most NATO members are spending at least 2% of their GDP on defence, which is more than they have in previous years. On the spend, can you talk to me about how much governments in the West, being Europe, the US, versus the East, being China, Russia, are spending on mobilisation efforts? And ultimately, is it enough?
Well, it seemed to be not enough. So that the NATO target is 2% of GDP. The US is well above it, I think 3.5% or so. If you went back 5 years, almost all European countries, with the exception of some in the East, Poland, the Baltics and the like, were well under 2%. Over the last 2-3 years, that's changed. So, almost all, maybe 75% plus of NATO members are now spending at or above 2%, and that number will keep on increasing. Yeah, but you've now got the new head of NATO, Mark Rutte, saying, well, 2% is kind of a floor, it's not a ceiling, and the real number is probably closer to 3%. Poland is going for 5%. And so you are seeing, and again, the Russian invasion of Ukraine has really focused minds in Europe, plus, of course, Mr. Trump, banging the table and saying, you've got to do more on this. And so, 2% is becoming kind of 3%. That's challenging because government balance sheets, particularly in Europe, but elsewhere, are already pretty stretched, right? So if you're going to spend more on defense, you've either got to borrow more or you've got to cut spending somewhere, and that's difficult. In the US, as I said, it's sort of 3.5% or so. And although, Mr. Trump is looking to cut spending, I doubt that defense spending is an area that he is going to cut. And similarly, in Asia, China is, and the rise of Chinese military spending is really focusing minds across the region. So you're seeing, significant increases in military spending from Japan, South Korea, Southeast Asia. It's difficult to get an accurate comparable read on Chinese spend because it's distorted by the fact that the cost of labor and the like is just so much lower, but has increased enormously over the last 15-20 years. And China is both in aircraft carriers, conventional, but also in sort of the drones and the like, is really becoming quite a formidable player in the Asia Pac. And so countries, including Australia, are responding. New Zealand, not so much, at least not yet.
For an example of how the spend could escalate, this is how the United States defence spend looked during World War II. The percentage of US GDP devoted to defence went from single digits to more than 40% in 1943 and 44, equal to about $5 trillion over a 5-year period. The US economy effectively became a military machine, with 60% of all American factories and mines being used for war purposes, according to this US Federal Reserve report from 1942. The unemployment rate dropped as more people entered the workforce, including women for the first time, which did cause more consumption and inflationary effects. America afforded it through taxes and selling government securities to American investors, aka war bonds. But government balance sheets are now riddled with debt. Can economies afford an escalation? Or perhaps they can't afford not to escalate?
In a perfect world, no one will be choosing to spend money on defence. In a sense, it's, apart from the people it directly employs, it's kind of almost without exception, it's money that could be deployed better elsewhere: health, education, infrastructure, tax cuts, whatever it is. So, but the reality is, the world in which we are living is not the benign world that we had hoped would emerge, from the 90s, which was, in hindsight, a fairly naive belief. And so, China, Russia are genuine threats to the West. Obviously, more of a physical threat to some countries that are proximate than to others, including New Zealand, that are perhaps further away. But again, the fact that this, it's not possible to distinguish kind of conventional physical war from economic war means that if countries collectively leave themselves exposed, they are going to find themselves exposed in a way that Ukraine was exposed. In the way that other countries in Asia are concerned about being exposed. So this is something that I think there is no real alternative but to spend. It's not ideal, it's not optimal, but it is the world in which we are living. And again, for small countries like New Zealand that benefit from kind of informal security guarantees from the US and others, if we are not seen to be pulling our weight in terms of contributing to kind of military capability in the region, then the risk is the credibility of that security guarantee is going to diminish over time. So there's, it's part of it. Just New Zealand has to play its bit, as do other countries.
The private sector seems to be playing its part, with a number of commercial companies mobilising on behalf of the state. Many US-listed companies already have heavy exposure to national security, with defence contracts making up billions on the balance sheets of Lockheed Martin, RTX, Northrop Grumman, General Dynamics and Boeing. Not to mention space companies with Department of Defence deals. There's also tech companies like Palantir, which make software systems to directly defend the US and its allies on the front line. Private companies are increasingly preparing the West for warfare too, such as Anduril, which makes advanced defence hardware designed for deployment for the American, British and Australian military.
Across all of these, you see a combination of kind of strategic motivation, but also commercial motivation. It's quite difficult to disentangle the two. But seeing a company in the defence space or in the energy space as purely a commercial proposition doesn't work so well anymore. These are now seen as strategic assets.
Well, I was going to ask you about exactly that, and it's been referred to before as the military-industrial complex, right? I mean, companies like Lockheed Martin, privately Anduril, and even rocket companies to some degree. How should investors be thinking about those sorts of companies in this environment?
Yeah, I mean, as you say, the defence industrial complex or military industrial complex is not new. It's been Eisenhower termed it in the 50s. It's just, it's different companies doing different stuff. But we are seeing, as you say, these new defence tech companies like Palantir and Anduril and the like, taking market share from the big primes, the Boeings and the Northrop Grumman's and the like. Those companies are kind of the old guard, and these new tech, kind of nimble, kind of drone heavy, tech heavy companies are taking market share. So governments, from the US to Europe and beyond are spending more in terms of militaries this year of GDP. So this is an area where the market is growing. Governments are serious about this, both, directly, but because a lot of these kind of companies operate at the intersection of military applications and kind of broader commercial application, they've got money coming in from, if you like, from both sides. So one of the sectors, certainly in Europe, but also in the US, that's done very, very well over the last 2-3 years is defence. So particularly since the Russian invasion of Ukraine, European defence stocks have taken off like a rocket, because historically, until the Ukraine conflict, many European countries simply weren't investing in military and defence, and now they have to, and they're going to have to do more. So anything in that space is super interesting, I think, from an investment perspective, both kind of conventional companies that make tanks, but also drones, cyber, kind of anything in the kind of conventional warfare or hybrid, I think is a really interesting area for many investors, and the shares of those companies are being re-rated accordingly.
We must guard against the acquisition of unwarranted influence, whether sought or unsought, by the military-industrial complex.
From an investor point of view, is any of this priced in? I mean, assets look pretty good and don't really reflect the world being terrifying if everyone's mobilising.
I think there is a bit of a disconnect, and markets do have a tendency towards optimism, which over the last little while has served them pretty well. But you saw what happened, when Russia invaded Ukraine, in 22. It was a surprise. Markets sold off. It was very bad for the exposed economies, and we could be seeing something similar again when markets begin to price the bad scenarios in. It could be quite disruptive.
Don't you think some of that optimism, though, David, is coming from the view, not by everyone, but certainly some in markets, that Donald Trump is seen as a deterrent? There's that view out there that Russia apparently wouldn't have invaded Ukraine if he was president, that there would have been a ceasefire earlier in the Middle East. You've seen that happen right before he was inaugurated and became president. So perhaps he is a positive force.
It's a plausible argument. I don't agree with it, but I don't think that it's a silly argument to make. Of course, we'll never know. And I doubt, to be honest, that Mr. Trump would have deterred Mr. Putin from invading Ukraine. I think these were kind of deeply held views, but maybe I'm wrong. And maybe he would have. And maybe we will see kind of a dampening down of kind of risk that China won't be adventurous in the South China Sea because, they don't quite know what Mr. Trump is going to do. So that is possible. And I think there are some grounds for some optimism in terms of Ukraine, in terms of Middle East, and the like. So I don't think that Mr. Trump is going to drive the world off a cliff into disaster. But I think it's also the case that we shouldn't place too much weight on Mr. Trump. There are some deeply structural dynamics at play in terms of China's behavior, China's sense of itself, its attitude towards Taiwan. Similarly, Mr. Putin is going to probably outlast Mr. Trump in office, and he has some very deeply held views on the role of Russia in the world and of Ukraine. So, it may be that we're going to move into a slightly calmer period with less conflict for time. That's certainly possible. But again, I don't think that's going to provide cover to countries say, look, we don't have to worry about defense spending. I think, in a sense, the world is moving in a particular direction. Governments for US, China, Europe are going to be spending more on defense. Hopefully some of these hotspots do begin to calm down a little bit. But I think it's also the case that the strategic rivalry between the big powers is not going to go away. Maybe it's some guardrails put around it. It's not going to explode. And for example, I'm not particularly concerned about Taiwan, at least not for the next few years. So I'm not on the edge of my seat waiting for conflict to break out. But at the same time, I think it is a turbulent environment, a risky environment with not many degrees of freedom. Things can go wrong by accident, I think, quite easily.
I was going to ask you for one word to sum it up, but I think turbulent would probably be it.
Yeah, I mean, turbulent, I think, the other way that I'm talking about this year is there's a very wide distribution of possible outcomes, right? No one, including Mr. Trump, I suspect, knows exactly what he is going to do, over coming weeks and months. And so speculation is not particularly helpful. We just don't know. Similarly, we don't know how China will react, how Russia will react. There's just a huge number of imponderables. And so for an investor, for a corporate, or indeed for a country, you've got to make some educated guesses, I guess. But more importantly, you've just got to be prepared to scramble and to be agile in response and be prepared to be surprised. Because I think, as we learned a bit during Trump 1, and I suspect even more so in Trump 2, surprise is going to be the order of the day. Is
there anything else on your mind, David, or is this mostly it?
It's been largely kind of negative and kind of risk focused with a kind of detour into defense stocks. But I would say, in general, I think that the background risk profile, economic and geopolitical, is quite high. Debt levels, inflation and rates, geopolitical turmoil of the type that we've been talking about. But at the same time, you do have some really interesting developments around tech. AI, quantum, fusion. Obviously, those technologies are playing out on kind of quite different timelines. AI is quite close. Fusion is further away.
Well, that depends who you ask. I mean, some people might think fusion could happen in the next 5 years.
Yeah, but people said that 5 years ago and 10 years ago. And maybe I'm wrong. This is not my area of domain expertise. But I would say that at the same time that you've got these kind of powerful kind of currents of kind of risk and uncertainty, you also have, I think, quite powerful dynamics that are positive in nature. And so for me, 25 and beyond is going to be a kind of a wrestling match between kind of politics, which I think is largely negative, both the geopolitics that we've been talking about, but also populism and the like, which has, I think, got an economic cost attached to it. So you've got those forces, but at the same time, you've got cross currents of, I think, technologies that really could be quite powerful for productivity, for economic performance, and by extension for investors as well. But it's going to be quite granular to really form a view on where you should be investing. You can't say, I think the US is going to do well, buy the S&P. So it's a matter of figuring out, what are the vectors, what are the verticals where that technology is really going to have an impact, and investing, behind those opportunities. So it's not all downside. There are some positives as well, I think.
And it's worth noting that if we sort of link those two together, that the biggest technological advancements have historically come in mobilization wartime efforts, right?
Yeah, exactly. So if you think back to the late 60s and 70s, which were not a great period economically, in terms of inflation, runaway deficits, exchange rate uncertainty, and obviously geopolitical turmoil from Vietnam to the Cold War. But that was, as you say, the beginning of, well, not quite the beginning, but it was kind of the kind of the early stages of huge amounts of investment, from the kind of the Apollo program in terms of space to DARPA, the early stages of the internet. So the investments that were made back there, often motivated by these strategic considerations, yielded a benefit decade, 2 decades later. So I think, as I said earlier, some of this money going into defense is just a dead weight loss. It's not productive. Yeah, but there's also going to be a lot of money that flows into tech that's going to be dual use. And so I think, I remain, despite appearances, I remain pretty constructive on the 2020s. It got off to a rocky start for the pandemic, but I think, from a technology perspective, from a productivity perspective, I think we're on the cusp of, structurally improved performance. Clearly the geopolitical considerations need to be taken seriously. They do have a cost. But I remain pretty glass half full. I think the technology, the productivity, potential is really, really quite high. And I think, there's some opportunities to be invested behind.
Well, let's call it there, because I would love to end this on a more optimistic note. David, thank you so much. Always good to talk to you.
My pleasure. Thank you.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.